Hello everyone. Today in the subject F7 we will be learning about investment property. And investment property falls under IAS 40. Now, first of all, what comes to your mind when you hear the word investment property? Yes, it might be an investment, of course, through property. But now, what kind of investment? An investment should generate returns for us. Agree? So technically, investment means we earn income from property. Now, how do we earn money from our property? There are two common ways. One is we receive rentals. And the second way is capital appreciation. Now, you might be wondering, what is capital appreciation? Capital appreciation simply means that the value of our land has gone up. So this is actually a capital gain for us. Yes? Now, let us look at the definition of investment property. Okay, investment property is a way of earning income from rentals or capital appreciation or both. Now, how can it affect both? Meaning, how can you earn rentals and capital appreciation also? This simply means that supposing you have a building, now you give it out for rent. Yes, this means that every year you get income, rental income. But every year also the value of the building might go up. Now in that scenario, investment property is leading to both income from both sides, rentals and capital appreciation. Okay, here are a few examples of investment properties. Okay, here are a few examples of investment properties. Supposing a building owned and rented out under an operating lease. This means that you have a building and you are going to receive rental income. Okay? Next one is a building owned for capital appreciation purpose. Now, in this scenario, you are not renting out the building to anyone, but you are simply waiting for the value of the building or the property to go up. Next one is a building owned by a parent and rented out to a subsidiary. Now you might be thinking, isn't this what we call intra-group? Yes, this is intra-group, meaning in the consolidated financial statements this does not enter, but in the individual parent and subsidiary financial statements, investment property will enter. And the fourth one is a building in construction for future investment property. This means that you are constructing a building for the purpose of renting it out, capital appreciation, or renting it out to your subsidiary. Okay? Now, please remember, just a note here, when you start using the asset, okay? When you start using the asset, IAS 16 applies. Why? Because now, if you use the asset for the day-to-day activities, such as production, now you will have to depreciate the asset. Now this depreciation will fall under IAS 16. Okay? Now, in a scenario where your main business is dealing with investment property, meaning your business just buys properties for capital appreciation, or your business just buys properties and receives rental income, now this falls under IAS 2, inventory. Okay, this will not fall under IAS 40, but it will fall under IAS 2. Now, how do we recognize investment property? Now, this is the recognition criteria of investment property. Remember, investment property is a non-current asset. Hence, it must meet the definition of an asset. It is probable that future economic benefits will flow to the entity. This simply means that it is probable that income will enter your business because of the property. And the second one is the cost of the property can be measured reliably. Okay? You must be able to measure the cost of the property reliably in order to recognize it as an asset. Now, how are we going to value the how are we going to measure how much our investment property is actually worth? IAS 40 requires us to value investment property at cost when you first construct it. Or okay, now we are going to learn how we're going to measure the value of the investment property. Okay, when you first value your investment property, the initial recognition must be at the cost of the property. Now this includes transaction cost. Supposing to buy that property, you had to go through an agent. Now you pay that agent, say a $10,000 commission. So that commission, you are also going to capitalize it as their cost. Okay? Now, that is your initial recognition. This must be followed in accordance with IAS 40. Okay? Now, in the following years, you can value your investment property at two things. One is the fair value model. One is your cost model. Fair value model means simply you are going to base the value of your asset on the market value. Okay? If the value goes up, the fair value model states that we value the asset based on the market value. Market value is simply the value today. Now, when the value of your asset goes up, of your investment property goes up, we will recognize the gain in the profit and loss. Okay? Now, usually in your profit and loss, you will have something called other income. Now, in that other income section, we will write gain in the fair value of investment property. Please note that when it comes to IAS 16, property, plant, and equipment, if the value goes up, meaning there's a revaluation, we will recognize the gain in the statement of profit and loss and other comprehensive income. When it comes to IAS 16, we put the gain in other comprehensive income. But when it comes to investment properties, we will recognize the gain in profit and loss, not other comprehensive income. Please take a note on that. Okay? Now, when it comes to fair value model, supposing, say, back in the days, we used to use the asset for our business. Maybe in our building, Actually, we used to have our day-to-day operations there. But now, we want to move out from that building and we are renting it out. Okay? This means that if the value of the building goes up, we are going to use the fair value model. Now if we used it beforehand, now we are not using it again, then we will compare the carrying value and the fair value to calculate the gain. Okay? When it comes to cost model, this is your IAS 16 cost model. Where we will value the assets at cost minus accumulated Okay? If we use the cost model, this means that we will value it at carrying value. Now carrying value, we obtain that figure by calculating cost minus accumulated depreciation. Now in most cases we only use cost model if we are using the investment property for our day-to-day operations. Now as I said earlier, if we use the building, supposing we use an office building for our day-to-day operations, we apply IAS 16. We will have to depreciate it and we will have to value it at carrying value. But if we do not use it for our day-to-day operations, then in most cases the fair value model is being used. Meaning if there's a gain, we will recognize it in the profit and loss. Let's do an example to make things more clear. Let's try doing this example. Following a closure of a division, Carter vacated from a building and decided to give it for rental on 30th June 2008. Now, from that sentence itself, we can know that actually Carter was using that building for a division. Now, he is closing that building, he's closing the division, and renting out the building to earn rental income. The building had a cost of $1 million and a useful life of 50 years on 1st January 2000. This simply shows that we actually had the building on 1st January 2000. We used it for 8.5 years. Now we are not going to use it anymore and we are going to give it out for rentals. On 30th June 2008, the fair value of the building increased to $950,000. And on 31st December 2008, the fair value was judged to be $1.2 million. Calculate the amount to be entered in the statement of profit and loss and other comprehensive income. Okay? Now, if you see here, they bought the asset on 1st January 2000 and after 8.5 years, they are closing it down and giving it up for rentals. So can I say that for that 8.5 years, yes, 8.5 years, I am actually using the building. Now when I use the building, I have to depreciate it in accordance with IAS 16. So let us calculate the depreciation per year. Okay, now my cost is $1 million. My useful life is 50 years. This means that my depreciation per year is $20,000. Okay? Now, I am using the building for 8.5 years. 1st January 2000 until 30th June 2008. This means I will depreciate it for 8.5 years. $170,000. Okay, so what will be my carrying value? I have a cost of $1 million and I have accumulated depreciation of $170,000. This means my carrying value would be $830,000 on 30th June 2008. Yes? Now, it says here, on 30th June 2008, the fair value of the building increased to $950,000. On my value, okay, this shows that I have a gain of $120,000. Now, this is what you call revaluation surplus. Okay, this shows that we used the asset for 8.5 years. That is why now the carrying value is $830,000. But the value went up to $950,000. Hence, we are going to credit $120,000 to the revaluation surplus. Yes? Remember, revaluation surplus also enters the other comprehensive income. Sorry. Okay? Once you calculate profit for the year, below it you will add your other comprehensive income of $120,000. Now, let's pay a closer look. Okay? On 30th June 2008, the fair value is $950,000. Now, from this date itself, we are renting out the building and we are going to receive rental income. We are no more using the building, right? This means that now we will apply IAS 40, not IAS 16. Because we do not use the building anymore, we do not have to depreciate it. So, my fair value on 30th June 2008 was $950,000. Now, my fair value on 31st December 2008 is $1,200,000. This means that there has been a gain of $250,000. Yes? Now remember, from 30th June onwards, I am using IAS 40 to value my property. This means this gain of $250,000, do I record it in other comprehensive income? No, I do not record it in other comprehensive income, but I record this in other income. Okay? So remember, when approaching questions like this, when we are using the asset, like in this scenario, we were using the building for a division, we have to depreciate it in accordance with IAS 16. But once we stop using it, then we follow IAS 40. Remember, a gain under IAS 16 will be shown in the other comprehensive income. But a gain in investment property will be shown in other income. Okay. That is it for your IAS 40 investment property. If you have any questions, please feel free to email me on the email shown below. Thank you for watching this video, and I hope to hear from you soon.